please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, we have the WPI inflation number that's up for you on the screen. There is some cooling down on a month-on-month basis. It's coming at around 2.84%. That compares with around 3.58%. So, there is some cooling down that we're seeing in terms of the inflation numbers. We're waiting by. We'll try to get up, the breakup as well as to what went on in the last 1 month or so. And why exactly we did see a bit of a cooling down. Yes, we're expecting some kind of cooling down, but 2.84%, I'm not sure whether or not we had a poll. But safe to say, Sumaira, that the number below 3% will be more comfortable than a number above that 3.5% odd percent, Sumaira.
Hi, that's true actually, Nigel. So for Jan, in terms of WPI, we were estimating a number of 3.13%.
Yeah.
So this is definitely better than that. But I must tell you that the range between the economists, which we had polled, ranged anywhere from 2 to 3.1%.
Okay.
So coming in at 2.84%, I think it's pretty much in that range. But it was expected to moderate owing to a favorable base plus the easing food prices. So it's not entirely unexpected, but I guess the fact that it has come in sub 3% would bode extremely well. Lata is also with us. Lata, the number looking good to you?
Well, yeah, I mean, compared to our poll, of course, it looks very benign. And compared to the month ago numbers, it's definitely encouraging. The importance of the WPI should not be overstated. Yeah. The WPI is not a number that is followed at all. It's only the consumer price inflation that is followed. But the fact that it has fallen substantially, I'm still waiting to see if it is, what is the specific item that's fallen. If it is food inflation, then of course that will be a little bit of a positive because in the CPI numbers, we did see a sharper fall in the food inflation. But I'm not able to get more details on what exactly fell. The PNB website is not yet obliging. So if we can have the details of that, at the moment we have only one line, so difficult to say anymore. We have to wait and see if this is largely food or largely metals. Okay, actually we have Rupa Rege Netsure with us. Rupa, unfortunately we can't help you with more numbers except the headline. We are still awaiting details. How do you react to this 2.84%? Does it look like we should not fear a rate hike anytime soon?
Well, it is, slightly above market expectations, but sequentially we had seen some hardening, in crude petroleum, fuel items and other global commodities, which are part of the raw materials in the WPI. Also, PMI manufacturing has been showing pressures building up from the input sides. So that is getting reflected. But you see the base effect is very favorable for WPI, unlike for CPI. Because last year, I think in January, there was significant pass-through of global commodity prices.
We have a few more details,
domestic producer prices.
Rupa.
So I think
I will just come to you. The wholesale food articles inflation is up 3% versus 4.7 in December. So food has gone down, but non-food is actually contracted. It's minus 2.9 for non-food articles. And then a little bit on sugar. Sugar has seen a contraction. We know that sugar prices have fallen. As well, fruit and vegetable inflation is less than it was in December. Well, I'm just waiting to see if there are any more in terms of manufacturing inflation. Metal inflation is still pretty strong at 12.9% year on year compared to 10%. So metals and even chemicals have not shown any softness. Chemical inflation also higher. So it's not industrial products. It looks like it is more food driven fall in the WPI. Rupa, you were just saying, therefore, directionally it is telling you that inflation under control and not a big bother at all.
Well, in the so far as WPI is concerned, the base effect is favorable. But
Okay.
so far as CPI is concerned, the base effect is unfavorable until June, July.
Okay.
And that is what is a nominal anchor for monetary policy. So I think we have to, accept slightly hardening trend in CPI until May, June.
Okay. Well, we will have to leave it at that because that's about all we have by way of details coming in on the WPI. Thank you very much, Rupa, for joining us. We are going to see a somber or a controlled number, reined-in number on WPI inflation, also because of the base effect, as Rupa points out. But it's not the most important number that the Reserve Bank looks at. So, well, at the moment, you can say that if there is anything positive about, if there is anything to say about this number, it's a positive impact.
Okay, all right, Lata, thanks so much for taking us through all those details. I think the markets as well, we are sitting with a gain of around 60, 65 points. A bit of a leg up is what we are seeing. A few stocks that have moved high in the last few minutes. I think GAIL has moved a tad bit higher. So let's pull up the intraday chart over there. HPCL as well has done a bit of a move. In fact, a couple of those OMCs, they've recovered a tad bit from the low point of the day. The mid-cap index, remember, is doing a relative underperformance today. But Apollo Tyres, that's one stock that you should pull up. That has virtually moved to the high point. Well, the markets are holding in the green, at least the headline index. The mid-cap index, as we stated earlier, that's doing relative underperformance. But Cox & Kings, that's the company on our radar. They delivered a rather good set of numbers. Remember, it's coming on a low base, though. The profit number surged up. The margins as well have expanded to around the 12% odd mark. We have with us Mr. Peter Kerkar, the Group CEO of the company. Hi, Mr. Kerkar. Thanks so much, sir, for joining in. Let's talk about your Indian leisure business. I was just looking at it and a couple of brokerage notes. They're saying that, they're looking at around a 15% volume growth. Achievable or not?
I think that, we've seen some pretty strong numbers on the leisure side this year. I think that going forward, which is what you're referring to, I think that a lot of what we said in terms of GST impact and clarity on that area has panned out now. So we are hoping that the fragmentization in the industry will sort of go away and the smaller players will be forced to either become sales agents or actually join franchisee networks such as ours. So we are looking at, yes, having a mid-teens plus target for our business going forward.
Mr. Kerkar, good afternoon, sir. Could you tell us what has been the Forex impact this time around and what are your margins ex of Forex?
So the Forex impact has only been 16 crores of additional revenue. And if you take the EBITDA growth excluding the Forex gain, it's been, it went up from 117 to 150 odd crores, which is a 30% increase. If you actually include the Forex, then obviously it's a 68% increase over last year because of the adverse effect last year of the pound. So there's a 30 crore swing in that regard. And in terms of margins, we are still in the 40% margin on EBITDA, plus 40% plus margins on EBITDA as a group.
All right. So, what about your hybrid hotels? How many rooms do you have? What's the planned, room addition of them? And what kind of revenue can we look at going ahead?
So if you see, the year-on-year increase has been substantial in our Meininger hybrid hotels. They've in fact increased by over 30% on top-line revenues and around a 20% increase in our EBITDA margins. In our EBITDA per se. We are predicting that from our current 9,000 plus beds, by the end of next March, that's the next financial year of 19, we'll be at 15,000 beds. And this is completely on track. In fact, this year we delivered 4 new properties itself. And coming on stream to hit the 15,000 targets, it's another 9 hotels that we'll be opening in this coming financial year. So it's been a very strong growth and it's been underlined by pretty good occupancies starting out. So we are very bullish on the Meininger Hotel Group and we see this trend continuing into the future, not just for next year, but we already have our openings planned for the next 4 years. And we've been largely on target in terms of delivery of rooms and beds.
Your finance costs has gone up quite significantly, actually, if I see year on year. Could you give us a sense of what the debt, total debt is like, and what's the repayment plan?
Yeah, our total debt in terms of gross debt is around 4,100 crores. But if you see the group, it always traditionally sits on cash, particularly in our foreign offices, where we receive advances from our clients, prior to departure. So, for example, in education, sometimes we can be collecting deposits from our clients up to 18 months in advance. So our net debt is at around 2,700 crores. And, we've been guiding year on year that this figure will be reduced by around 200 crores a year. There is, of course, in this particular year, we've seen a greater intensity in terms of utilization of capital in India, particularly when the GST issue has, not totally been clarified, but it's now clarified. And we are now seeing that there's a normalization of working capital utilization. So overall, we're still sticking to our guidance of about 200, 250 by the end of the year.
Okay, all right, sir. Thanks so much for stopping by, sir, and in fact giving us all those details. All the best for the remainder of this fiscal as well as FY19. Well, shifting focus then to the big story today, the $1.8 billion fraudulent transactions detected at PNB. CNBC TV18 learns that 6 banks are found to have discontinued bills against PNB, issued LOUs to Nirav Modi as well as Gitanjali Gems. Ritu Singh joins us with all the details on that front. Ritu, fill us in.
Nigel, that's right. 6 banks have given loans to Nirav Modi and Gitanjali Gem companies on the basis of the letters of understanding or undertaking issued by Punjab National Bank officials fraudulently. These 6 banks include Bank of India, Canara Bank, Allahabad Bank. We also reported yesterday Axis Bank is one of them. We also have State Bank of India, who's also one of the banks involved, as well as Canara Bank. As far as the quantum is concerned, the entire scam, according to PNB, is about 11,300 crore rupees. Of this, we understand SBI has an exposure for about 960 crore rupees. Canara Bank and Bank of India between 1,000 to 1,500 crore rupees each. Allahabad Bank about 2,200 crore rupees. Axis Bank about 2,000 crore rupees. But subsequently, we understand Axis Bank has sold down the entire exposure it had, towards these accounts. Union Bank of India, lastly, about 2,300 crore rupees. But remember, all of these are now up to Punjab National Bank to repay to these lenders, not really Nirav Modi and Gitanjali Gem companies. Therefore, the pressure is really mounting on Punjab National Bank to repay these dues. But remember, Punjab National Bank in its letter yesterday has also said that the blame is partly also with the overseas officials of these Indian bank branches that did not share adequate information at the time of giving credit with Punjab National Bank officials. Of course, these Indian banks have been saying that the money did eventually go into the Punjab National Bank account and was dispersed from there. So the liability, according to them, lies with Punjab National Bank.